tariffs. Tariffs change the price of traded goods. They're like taxes. Tariffs are a kind of tax. They used to be the main kind of tax. And the return goes to the government, just like a tax. Quotas change the quantity of traded goods, and the money goes to companies. Consumers are hurt by both. Both things either make things more expensive for you if you apply a tariff, or don't let you choose if there's a quota. Economists tend to prefer tariffs to quotas because the price mechanism is less lumpy. I mean, if you can refine the quota down to like one little item, okay. But tariffs, you can apply a 0.01% tariff. We do that. With quotas, if you say, hey, you can't have anything more than this, it's somewhat disruptive. But they both hurt consumers. And if you prefer to send the money back to firms, you're going to prefer quotas. You want the money to go to the government, you prefer tariffs. Capital controls, which is a big topic with regard to China and a number of other countries that people don't really understand. The basic of capital controls is just a money quota. Not that much money can leave my country. And some people will say not that much money can come into my country. So it's just a quota for money. Same thing as a quota for oil or shoes. Something I bring up a lot in statistics. Everybody in this country focuses on the merchandise trade deficit. Like, why don't they just say it's trade in goods? I don't know why we have to use merchandise as this word. Don't forget trade in services. The U.S. is really good at services. We export a lot of services. We want a services surplus. And even if we didn't, you need a full picture. The full picture is goods and services, not just goods. Goods trade is back when we didn't trade services. We've left the 19th century. So remember that when someone tells you there's the merchandise trade deficit, you should be asking, what's the services trade balance? Two more terms I want to define that are easy: non-discrimination and national treatment. They're both important in the WTO. A lot of times people don't know what they mean. Non-discrimination means you just have to treat all your partners the same. Nobody does this. When we sign a TPP, we will no longer be practicing non-discrimination if we ever do. GSP, which is preferences for poor countries, and some countries that necessarily aren't so poor anymore, violates non-discrimination. But the WTO principle is you're not supposed to discriminate against different trade partners. National treatment. National treatment says foreigners and domestic entities are supposed to be treated the same. We actually do a really good job of that. Most countries don't. You know, it's like, haha, national treatment, wink, wink, except when there's an issue, and then we don't like national treatment. If you want to get into details, Apple, Samsung have a patent dispute. Not clear to me that Samsung was treated equally to Apple in that dispute. So that would be an example, if you agree with me there, of violating national treatment. We do a very good job of that. China, for example, does a horrible job. They promote their state-owned enterprises at the expense of everyone, certainly including foreigners, also their private enterprises at home. Okay, let's start to answer the question about why do we care about trade data at all by talking about the balance of payments. The balance of payments is intensely boring, and no one wants to talk about it. And the reason it's boring, and my best friend is an accountant, bless her heart, it was a great field for her to go into because when she got into it there were no women accountants, so she just leaves jobs every 2 years and get raises all the time, and brilliant of her. But accounting is really boring, really, really boring. You know, what do you call a person who doesn't have enough character and personality to be an economist? An accountant. Balance of payments is international bookkeeping. That's what it is. So the reason it seems like it's boring is because it is boring. It's not anything meaningful in itself. It's not like the volume of exported gas. It's a way to keep track of the books. Why I'm even telling you about this. People will, let me give you some more terms and then I'll get to the punchline. The current account is mostly trade. It's things where there's no long-term claim. It's all wrapped up in 90 days. Everything's wrapped up in 90 days. We put it in the current account. Now, I don't know why we don't call it the future account, but for some reason we've decided to call it the capital account instead for the long-term stuff. If there's a long-term claim like investment, I want to own something in another country, that goes into the capital account. And the rest of this is all accounting. There's something called errors and omissions. What does that mean? It means when we can't figure out what just happened, we'll just put it in errors and omissions and make it go away. That would have been great in high school math, right? I can't get the answer, and I'll just create an errors and omissions category, and boom, I'm okay. So it kind of robs the balance of payments of substance when it never can be wrong. But it never can be wrong by definition. It's double entry bookkeeping. And if you've done any accounting, that's just a way to know where everything is. It doesn't mean anything, which is part of the answer to the why do we care about the trade deficit. And I'm going to get into the rest of it soon. The trade deficit by itself doesn't mean anything.